Good afternoon, everybody. Happy Friday, and welcome back to Markets for Millennials, the weekly wrap from the week of October the 18th to October 22nd. And I hope you guys had a great week. A lot of interesting things happening in the markets, and so we'll just jump right into it with the DXY. Taking a look to get our bearings here on the dollar index. Always important to remember that the dollar is in this index is weighted against the euro, the yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. And but 50% of that is to the euro, and so it's always important to check if you are looking at currencies to look at the euro, U.S. dollar. It's not a perfect inverse, but it is very similar. That is something that I like to look at when I'm looking at the DXY. But just starting out here, the DXY is firmly in this uptrend. I had, if you look at previous videos, I've had this trend line which was connecting these two peaks because I just wanted to see what would happen on the upside, and it looked like something legitimate because we got above it and we retested it and looked like we were going to resume up, making a higher high right here a few weeks ago, and it obviously didn't hold up there. One of the things that I had talked about previously was looking at this 94.70 level on the DXY as a really important level because that's the place that we wicked down to during the March crisis of 2020. We dropped below it in July of 2020, retested it in September, and have not gotten back up to this level since, for the most part, other than a couple of near misses. And so here, I'm looking at this level, and my level is just below the 0.70 mark, but I've looked at this as a really important horizontal level. If we can get some closes, some consecutive daily closes above that level, then I would be looking at some more dollar upside. And with all the things that are going on with China and just different things happening in the world, and um, it's totally possible that people could, because the dollar is the reserve currency, and actually the ECB is devaluing and printing the euro more at a higher rate than the United States is printing dollars right now, and so that's something to keep in mind. And with all the things going on, we could see a prolonged, dollar strength trend. But obviously, unless we get a close above, a couple of closes above 94.70 or a couple closes below 89, obviously we've been in this no man's land for over a year. And so like I said, had this trend line, and I'm not sure if I should keep it or not because we bounced off of it, but then we failed to get that follow through above this resistance. But we are still in the channel, right? So we still are in this trading range, this kind of uptrending trading range. But I was wondering because we bounced off of it and then we continued to kind of stay above it, even though we wicked down to it. And then we had a close down below, and then this green candle right here, we tried to retest it, and then we haven't quite resumed down yet because we have to make a lower low than this daily wick, but we did not yet. So it's entirely possible that we could, stay right here. We could come back up. Maybe this trend line, this white one right here, doesn't mean anything. So that's kind of why I had it faded a little into the background. But I'm not deleting it yet because I still want to be aware of it. But the dollar is in this uptrend. And I think that both in the near term and in the long term, what I'm looking to see is this line hold right here because this is the current trend, and these are the outer bands of the trend right now. And so if we were to get below, retest it, and resume down, then the next place that I would be looking would be probably approximately this. It's very shallow, and I've had this trend line marked before. Might not be exactly there, maybe a little bit higher because I got some touches on these wicks down here. So maybe something like that. But this is only going to come into play if we do get if we do break down below um, the current channel as I have drawn, so right over here. I'm going to leave the white line that I just drew, but I'm going to darken it so that it's not in the foreground. And then obviously that level at 89.27 is going to be pretty important as a breach point. In spite of the dollar being strong, and then also yields being strong, and I'll talk about the yields in a second again, we've had equities coming up to their all-time highs. The last time we made, technically we wicked higher actually. Let's see, so the high was 45.51 and 50 cents. Yeah, so we did wick higher than our previous high in September, early September, September 3rd, but we have not closed above it yet. Now, to me, this is not surprising. I suspect the way that things are going that we're going to get a consolidation right here and then get above, and that could take a couple of days. It could be a week or two, but that's what I'm thinking is going to happen. And part of it has to do with, I mean, this move out of our repair trend line right here was fairly decisive, and but then at the same time, like how many days in a row? 1, 2, 3, 4, 5, 6, 7 trading days in a row of green candles, and so I mean decisive green candles too, and so for me, I just don't that kind of price action. I'm always looking for some kind of pullback or consolidation. There are people who are looking at this as a potential double top. Um, I don't know. To me, I don't think so. But I do want to be aware of that. And that's why if you're watching this, you got to watch that level um, and see if we can get above that. Um, I'm looking again. I'm looking more to stay in this range right here. But we could get a back test of this trend line because we never came back down to test the breakout. So we could get a back test all the way back down here onto this trend line before coming back up. And that would actually be healthier if we could come down and touch this trend line and successfully resume off. That's healthier in the long run. But we also might not get a full test. We might just get a test right there at this horizontal level. But that is what I will be looking for. And quite a bit the same on the Dow. Again, we wicked and made a higher wick high, and we have gotten above this shallow repair trend line, but didn't get a close above the all-time high. And so again, I'm watching the same sort of action here on the Dow as I am on the S&P. The Nasdaq also made its first repair, and but it did not quite get all the way back up into its all-time high. And so again, you're looking for a retest. That's the most healthy thing, is to get that retest on this trend line and then resuming off. And that would be the risk reward on a trade right here, if you take a long trade, and you could put a stop loss here or here, actually probably a little bit lower on this one, and your risk reward is really good on that. And I mean, if you just think about this, if you take a stop loss at this level right here, so actually let me just pull this trend line a little bit further just for the sake of argument here. Depending on how long it takes this, and this is if, okay, no guarantees, if it came down and retested, say right here, the risk reward, if you take a trade right here with a stop loss below this swing low, you're looking at close to 2 to 1 to get back up to the all-time high. And I see nothing that suggests that equities are going to be correcting in a major way anytime soon. They could, but like look at the things that we normally look for. And I'm using the Nasdaq as an example here. Is you're looking for lower highs and lower lows, and we were getting that over the last few weeks. But then right here we made a higher low and not a lower low. We would have been looking for a low to be down here. lower swing low, but that obviously didn't happen. And then not only did we make a higher low, but we actually got above this high and we broke our trend line. So there's nothing in terms of technical analysis that makes me think that, now that that there's going to be any sort of meaningful correction. And where I was the one, over the last few weeks that was talking about watching out for it to come down 9 to 15%. It was totally possible, but this trend line, this ascending trend line, as it has been for a year, has provided a good buying opportunity. Um, and here we are, not too far away from all-time highs on the Nasdaq and the Dow and the S&P. So you could apply the same sort of principles to the Dow and the S&P as well. Again, just you can see here on the S&P, the higher low is put in, and then you get into a higher high. So it looks bullish. The Russell continuing to not be impressive, but again, I've talked about this a lot. There's two reasons, and I'm just going to repeat it again here. The only two reasons that I can think of for the Russell to be performing the way that it is that it's either pausing while before making another huge leg up, or it's waiting until we get a good, meaningful correction on the other equities. And actually, as I look at this, one of the trend lines that I was kind of keeping an eye on was this one from this kind of red wick low, connecting a couple of these other red wick lows. Notice it is sloping up ever so slightly, and I was watching that because those are higher lows. I mean, they're not great, but they are higher lows. And if you actually see here, even though like this is our kind of our first higher high in a little while, higher than this high. So let me just mark this. So we made a higher high than that. And the lows, boom, boom, boom. We've been making higher lows all the way up and even back here. So we've kind of got this interesting sort of, I don't know what to call it. We've got kind of like this wedge. So maybe we break down from it. It could also break up, but I don't know. Like there's nothing on the Russell that indicates that it's going to have a big crash down. I just don't see that happening. And in fact, going back to earlier price history, you just look at the length of time at which the Russell goes sideways. Let's take a look at this period of time prior to the March 2020 crash. You've got this long, I mean, here we are, look, February, and it's October and into November before we were able to break out of that. And of course, that was below the crisis, or like just before the crisis. So obviously the gains didn't stay. They weren't, I mean, they didn't stick around. But you see, like if you go back in the Russell's price history, you can actually see that we get these sideways consolidations for a good long time before we get any movement to the upside. And so I think for that reason, I'm more prone to actually thinking that the Russell is just pausing while, and then eventually it's going to get up to the top end of this channel and then it's going to bust out and we're going to get some movement. So I think, if the Russell does end up coming down into this area, I would take a buy. If you're going to buy equities, if you're going to buy futures, I would take a long position right there, because price has shown time and time again that it's going to hold right there. So I kind of go back and forth between being concerned about equities because of the Russell price action, and I alternate between that view and the view that it's just pausing. Let's take a look at yields. My yield chart. So here we are, again, just to kind of recap some of the things I've been looking at. I was watching this as a potential wedge. It actually broke up, not down. I had this channel right here, which started off as like a small bull flag, broke down. I just cloned the trend lines. Here we are on an uptrend. We've been making a bunch of higher highs and higher lows, especially right here. Boom, boom, those are higher lows. Higher highs right here. Today, a pretty big bearish reversal candle that, ooh, whoops, didn't mean to do that. Um, oh, now I messed up my chart. It's not good. See what I can do to get this back. I think I have to do this all the time. There we go. Um, yeah, pretty bearish reversal candle. Um, so who knows what's really going to happen? But we are approaching the levels, the highs, the more recent highs that we had back in March, the end of March of this year. Um, and I'm expecting that yields are not going to make it higher than that. That's my expectation, but I could totally be wrong. And I have mentioned before that what we're seeing in this part of the price action reminds me a lot of right here. And so price on, or the yields can move really fast. They've showed that over the last, 12 months that they can move extremely quickly. Um, so it's something I want to be aware of. I don't see yields going up higher than 175 or 177 or maybe 180, but it's possible that they could. And if they did do that, I can't see, I wouldn't say yields go any higher than 2 before there's some sort of emergency, reversal of Fed policy. And I think, part of the reason that we're seeing yields come up the way that we are is because people are anticipating, and the Fed has talked about their taper in the Fed meeting minutes. I don't have them pulled up. I should have done that, but in the meeting minutes, they've been talking about their taper coming up, and so that could happen in November. It could happen. Maybe they're planning it for December. Maybe they push it back and they say, okay, beginning of quarter one of 2022. Um, but I think the market's anticipating that much in the same way that the market anticipated it in the early part of this year. Um, and so I think you're seeing that same kind of price action for the same reason. It looks eerily similar to me. Like if you just look again at after we had the crisis, yields came down in the crisis and then they kind of consolidated and then we had a little bit of a rise and then it suddenly took off. Um, so then we had yields come down. We've had a rising sort of wedge channel sort of a thing, and then yields have started taking off. So to me, it looks very similar, and it's something I want to be aware of. But it's interesting to me considering that over the last few weeks, since the end of September, that yields have come up. Let me see if I can get a reading on this. That even with today's candle, yields are up 25% since September 22nd, so exactly a month ago. And in that same time frame, equities are up. Yeah, equities are up. How much are equities up since that day? Equities are up, 4.5%. You know, so maybe some people aren't satisfied because they're like, oh, why aren't equities up more? They're not making new all-time highs. But at the same time, they're making these highs, or they're getting close to their all-time highs, and yields are coming up as well. So that is something that I'm trying to be aware of. Gold and silver, let's take a look there. I was a little disappointed with the way that gold and silver performed today. I don't know what happened to this. I'm gonna have to drop this down a little bit. So on gold, over the last 2 weeks, we did come above this descending trend line, which has kind of been the outer cloned trend line from my channel that I had for basically the last bit of 2020 and then for most of 2021, most of the first half of 2021. And we ended up having that huge, on the 15th of October, we had that huge bearish candle down. And then we've kind of come back up. And it's interesting. It's hard to really know what to make of this because I just talked earlier about making the higher lows, and that's what we've got here is the higher lows. Let me darken the line here. So we've actually got this kind of ascending price action here, and that's a good thing, right? Higher lows and higher highs, and this wick was higher. But I think I was just disappointed because we poked above the 1800 level and above this 1794 resistance that I've had marked here. And yet, like look how much of that gain that we gave up. We were up 0.5% on the day. But at one time, let me see from the start of today, at one time we were up as high as almost 2%, 1.77%. And so that means we gave over 1% back. And that's a little concerning, but we are still above this level. So I am cautious here. I think, having seen gold over the course of this time frame in April, May, and June of earlier this year, only to get like smacked back down and come back to the same levels that we came down to early in the year. I think that makes me kind of gun shy to get really excited about this. And I've said before, I'm not super excited that you could always buy. The lower you can buy gold, great. If you're wanting to buy gold, these are the levels to buy it. But I'm saying just for long-term trend, until we get above 1900 and specifically above 1916, I'm still not excited about the trajectory of gold. Silver was better. Silver broke out of its channel. We actually got above this level at 2410 or so. But then kind of the same thing, and we got smacked down by a resistance at 2487, which you could see was resistance over here in September and was support in July, and was support and resistance at various points in late 2020 and early 2021. So I do think that's a good level to watch. But actually, if you look here, this is a really important spot to check out because we got a breakout from this trend line, from this line of repair, and we got the retest, and this candle coming up above and making a higher high was the resumption. And so even here, we got a breakout and then a retest, and it did technically resume because it price traded up here. It is resuming. And so you can add the same kind of trend line that I did on gold here. You can do that on silver. And so what I'm going to be watching is both on gold and silver, are these ascending trend lines going to hold? And again, this looks very similar. Oh, I already have a trend line here. See, look. This looks very similar to the pattern that was starting to develop over here in late March and into April and May and early June of this year. So I want to be aware of that. And again, that just goes back to the just feeling like I don't want to get burned here by saying that, oh, like here we have this trend line, right? You can see that I did the same trend line here on gold. That we had this price action coming up, and I was on Twitter talking about it, and I think on my channel, even here on YouTube, I think when we were right around here, I was like after we broke on this candle on May 6th, I was like, yeah, we're not going back down. And then obviously I ended up being incorrect on that because we did come back down and we wicked down to the same level that we hit in March, both at the beginning and end of the month of March. So just still wanting to be cautious on both gold and silver. And then finally, the last place I was going to look today is on Bitcoin. And I've made some tweets about this. A lot of people have been concerned about Bitcoin. So first of all, celebration, because, and I was going to make a video on Wednesday when we made all-time highs, but I just didn't have the ability to do so. But what a great, I mean, this is just amazing. I mean, think about where we've been over the last few months. Think about how long I've been talking about Bitcoin on my channel, on the weekly updates, or doing some of my other Bitcoin or even GBTC videos, and how hard it was, how bearish people have been, and people really capitulating with their money, but also capitulating mentally. And I know that's something Jordan, Lindsay, and CTM keep saying. So shout out Jordan and CTM. That this is where people mentally capitulated, and it's true. And now we're well into our second wave. We've made a higher high than wave one, so this is wave two. I should see if I could pull it up on Twitter really quick. So bear with me. I want to highlight Jordan Lindsay's tweet here. See if I can find it really fast. Again, hold on. Here we go. One of the things that I wanted to include here, because it's a really good point, if my computer will load, is that he's highlighting that in our first wave, there were 4 sell impulses that were triggered before before the actual correction of wave one. And so just to show you on this chart, you could draw these lines pretty quickly. So you had this first one was broken, and then you had the next one and that was broken, and then you had kind of a third one and that was broken, and then you had a fourth one that was broken, and then on the fifth one, that's when the trend line, or that's when we said, okay, wave one is in correction mode, because we started making the lower lows. And so all that is to say that, you know, a lot of people are looking at, they were trying to call a double top here, which none of us who are in CTM are saying double top. And none of us in CTM are even saying that wave two is over and that we're correcting in wave two. This is just one sell impulse. And I know that my sell impulse line is a little bit different than, you know, than Jordan's. I don't know if I have his on here. Here we go. He had this line. Mine is in a little bit of a different place. But so many of us in CTM have different lines, and that's okay. They're all playing out the same way. If you go to the 2-hour time frame, you can see that came below and tried to retest, and then we've come down again since then. And so what you see here is what I've done is I've created what to me is the line of repair, and this is going to be the most advanced level line of repair. That once you get this above this line and retest it, that's going to be the entry to take. And so I'm going to be watching. There are some who think that this is going to come out and you know, make new all-time highs again really quickly. Maybe it's a little bit more prolonged. But what I tweeted here was that these are the levels that I'm looking at. So if you use the Fibonacci levels, so I'll try to explain this right here. If you use the fib levels, what I noticed coming out of the mid-cycle correction in the first wave, was that as you go, price would come up, and then at each sell impulse, it would come down to either around the 236 or the 382 level. And then if you take the whole of wave one, so let me do this really quick. If you take the whole of wave one, then this actually retraced to the 0.5 level. And so that's why what I did here, if I can just, I'll put this up again one more time. That's why I put those yellow lines where I did, because I marked the 236, the 382, and the 5 level, because that's going to, for me, that's going to dictate what part of the wave we are in. If we stay between, if we stay between these top two lines in this range on the correction and then come out of it, then wave two for me is not over. It's if we go down that far, retrace that far, that would be for me wave two correction. And then that would obviously lead me to adjust when I thought the peak was going to happen, because out of in the correction of wave two from the bottom, that's when liftoff happens, and liftoff is about 30 to 33 days. Interestingly enough, obviously the 0.5 retrace is literally almost exactly the top of wave one. And so it could come all the way down to that. I don't think it will, but it could. And that's why I just want to have situational awareness of each of these three levels. But anyway, Bitcoin bullish as ever. Getting these corrections, I mean, if you just look at, I know I'm kind of jumping all around here, but if you just go to the daily chart and you look at the angle of this movement, even though we have had some red candles and some days where price came down pretty heavy but then recovered, this is some crazy price action, and we're not even close to liftoff yet. So it kind of looked a lot like this price action down here, except these were all, you know, green daily candles. So it's perfectly normal after this steep of an angle to get a price correction. And so I suspect that this will go down close to the 382 correction level, a retrace level. So that's what I'm going to be watching. But for me, and just full disclosure, for me, I am already fully positioned, fully invested in not only spot Bitcoin, but also my GBTC and other Bitcoin attached positions. I'm fully invested already, and I'm just holding. But these are just things I want to be aware of. And so, I think that that's the best way to make sure that you come out of this unscathed and with life-changing wealth that is created. So that's what I'm seeing. That's my look at the markets. I hope that you found this valuable, insightful. If you enjoyed the content, go ahead and like this video, subscribe if you have not already, and share this with somebody who you think might find it beneficial. Thanks again for watching, and I'll see you guys next time.